How are we all? And welcome to our update on home office expense guidance during COVID-19 for employee taxpayers. Our standard disclaimer, basically just go get some professional advice if you're unsure. This is general information, not specific to your circumstances. Today we're going to be talking about home office expenses. Many of us are working from home at various times during COVID-19, and the tax office have allowed us to claim home office expenses. So today we'll talk about how that can be claimed and the methods used, and also whether capital gains will apply during that time that you're claiming the home office expense. Okay, first of all, before you can claim the expense, we need to just verify that there's actually a deduction. And so the following must apply. You as a taxpayer must have spent the money, the expense must be directly related to earning income, and there must be a record of this so that it can be provided to the ATO if requested. You cannot claim an expense that your employer has reimbursed. So if something indirectly has been, like the telephone bill, been reimbursed by the employer, then there's obviously no more to claim. However, if it hasn't been reimbursed, then certainly you're able to be able to claim that using the following methods. Okay, you should obviously keep good records. The tax office will inquire if they feel as though you've overclaimed or just generally. So keep examples of timesheets, diary notes and rosters, emails between your employer. And if you're using the actual expense method, make sure you've got copies of expenses and a dedicated calculation of how you've worked it out, including the floor area. Okay, there is 3 methods that you can claim the home office expenses. So we're going to talk about each of those as we work through. There's the shortcut method of 80 cents per hour from the 1st of March to the 30th of June. At this stage, you are working from home to fulfill employment duties and not just carry out minimal tasks. You're incurring additional deductions such as running expenses of working from home, and you don't need to have a separate dedicated area. So this is basically came out from the ATO the other day. It's 80 cents per hour and it covers everything to do with running your home office while you're stuck at home instead of at work. Expenses you can't claim as an employee using this method is the occupancy costs such as mortgage insurance, cost of tea, coffee and milk and other general household items that your employer would have otherwise provided, except I think chocolate biscuits. Okay, so the 80 cents per hour is intended to cover these type of deductions. So we've just basically said it covers pretty much everything: cleaning, phone costs, internet costs, all that sort of stuff. So it's a general blanket. You know, I worked 40 hours a week last week at home. 40 hours times 80 cents is what we'll claim for that particular deduction. So to incur the expense, do you have to incur the expense for the shortcut method? No, you don't actually have to incur the expense, but you have to make sure that you've kept some sort of records. If you just opt to use this method, that's all you will claim. There's no further deduction. Method 2 is the fixed rate method. So I've highlighted there where you're actually claiming 52 cents per hour of heating, cooling, lighting, and there's also the further work-related proportion of your actual phone costs and internet expenses and computer consumables, and you need to work out the work-related proportion of the client and computer and stuff like that. That's probably more if you're incurring a lot of expenses beyond 80 cents. Then you might be working, I don't know, maybe you're out fixing cars out the back and there's a lot of power being used. But most people just working at a desk would probably just claim the shortcut expenses. Of course, the third method is the actual expense method, dedicated work area subject to CGT. So this is the one that's subject to CGT. So you need to keep a record of the number of actual hours you work at home during the year. You need to keep a diary. You need to work out client depreciation, and you need to work out cleaning expenses, interest, and all those other bits and pieces. Of course, if you're claiming the actual phone bill, you've got to deduct for the kids being on, the internet, Netflix, and all that sort of stuff. So this method is really only for those that are in business and would probably incur those expenses because they have a dedicated area. So the traveling salesman may be more applicable in that case because he probably doesn't have a desk, or she doesn't have a desk at work, and that's it. Home is their base. A business that works from home where the business is located at home. So it might be an architect working in a dedicated area in his house. That's a business. That's the sort of deduction he would claim. So if you're claiming the actual expense method, you'll incur a proportion of capital gains tax. If you claim the operating expenses, they will not get the full main residence exemption, and so a portion of that would be subject to capital gains tax. Obviously, there's some other measures there that we can look at, but it's something to be aware of. Whereas the 80 cents rule and the 52 cents rule, you definitely wouldn't be paid capital gains tax. So, so in most cases, the good news is that home office, you won't be paying CGT on those particular expenses, but the ones where there's occupancy, you definitely will. Okay, thanks for joining us. Just a quick update. Further details, you can contact us on 9597 9966 on our Facebook page at Gartley Advisory, our website